We're watching shares of United Airlines today after the big U.S. air carrier reported operating revenue and adjusted profit that exceeded expectations in its most recent quarter. Our next guest, however, remains cautious on the stock. Joining us now is Nicolas Owens, equity analyst at Aerospace and Defense for Morningstar. Nicolas, thanks a lot for joining us. The market has loved this story for a good 6 or so months or so, since August of last year. What do you think of the multiple that this stock is now trading at?
Thanks for having me, Paul. Yeah, I'm glad you asked about a multiple. I was just thinking sort of how to frame that. So they're looking for some $13+ in earnings for 2025. And so if you say they might get to a 10 times multiple, in the grand scheme, what is that saying? That's saying maybe they could maintain those profits forever, or the market agrees with me, which is it won't last forever. I think we're really just talking about a perspective of long and short term. They're doing well, had a great winter, will do well in the future, and they talked on the call today about positive trends in the industry, like a shortage of FAA or traffic controllers continuing to constrain capacity, harder to get wide-body planes, et cetera. And so this kind of supply-demand imbalance might actually persist for a year or two, and I have that baked into my forecast. But I also have a kind of normalization of supply and demand at some point, which is really where I differ from, it seems, from the market.
The stock's now trading at only 8.5 times expected earnings, and that's after the huge run in the stock that we're looking at now. I gather that's a very low number compared to what we hear, what we see with other companies in other sectors. I gather that this is a sector of the stock market where multiples tend to be low. Is that correct?
That's correct, and usually with that, just at a basic level, you either are discussing kind of profitability level or growth, right? They talked about achieving a double-digit operating margin someday, and I think they probably will at some point. But I really think that the core issue is, if you look at over a cycle, if you believe there will be some kind of normalization of demand, maybe a small recession or what have you, even as supply for things like engines and planes comes back online, the industry won't be able to sustain the level of profitability that it has in this kind of post-COVID rebound period.
So you think the stock is poised for a significant tumble. It's trading at about $110 per share. Your fair value is 36. You are advising investors to get out of this stock, correct? Yeah, it's overvalued. And even if I, juiced some assumptions and we got to a $50 fair value, I think we're just talking about a matter of degree and not direction. Is there a name in the U.S. Airline sector that you are constructive on, or are they all, in your opinion, overvalued at this point?
Well, interesting question, and I think that gets into some of the more idiosyncratic aspects. So I think part of the United Airlines story is not just that they've done a good job segmenting and kind of joined Delta, I would say, in the top tier, but that they are also eating a bit of American Airlines lunch, which had a misstep. So in this sort of since the summer period, that's part of what you're seeing is a little market share gain, and that could equalize as American rights itself. Southwest took a tumble and attracted some attention from an activist investor, and I think the shares are closer to fairly valued, if not a tiny bit undervalued, because they have. They're making some changes. But the important thing I think to remember for the long term is that as an industry, airlines don't make money over a cycle.
Nicolas, thank you very much for a good conversation. Nicolas Owens, equity analyst at Morningstar, has got a sell rating on shares of United Airlines and a price target that is about 60% lower than the prevailing share price.